Bitcoin seems to be somewhat of the safe zone right now in most of crypto. We've seen a lot of the altcoins that have started to struggle, Solana being kind of the poster child of this issue with FTX. But at the same time, you look at some of the power players like Grayscale that have really kind of put a little bit of question mark into the market. And I want to jump to this first story. Grayscale liquidation could unleash a Bitcoin Armageddon. I love these headlines that these news outlets do. But essentially what they're talking about is the GBTC fund, which has fallen around 40%. And if you look at this chart right here, I just want to kind of show this over since January of 2020. You can kind of see the normal run on the Grayscale chart, and then where we are right now, which is really at its, a lot of people either look at this as a great buying opportunity if you're just buying into Grayscale, or if you would rather just hold the asset. But if you look at Grayscale's centralization, if they really do have 600,000 plus Bitcoin, what could happen if we did see some sort of meltdown with Grayscale? You being a historical trader, an advanced trader, you've been in these markets before. What do you think?
Well, it's an interesting situation. So let's not forget that this is a closed-end fund. This is not an ETF. There is no creation redemption function to ensure that the net asset value of GBTC is reflected and trades right on its price. So it's premium or discount, and in this case, it is trading at a significant discount, is set by supply and demand in the market.
Right.
Now, one thing that I take issue with from that headline is if GBTC has to liquidate. The funny thing is, people who own GBTC already assume they own Bitcoin. So if GBTC turns around and has to liquidate, which I don't believe they will, the reality is the buyers of GBTC are already the people that own, or excuse me, of the Bitcoin are already the people that own the GBTC. You see, you have to unwind it from both sides of the trade. So a lot of these headlines are sensationalistic. Let's not forget that GBTC traded at a premium as high as 100%, i.e. twice the value of the Bitcoin that was held in the fund. And what happened is there was an arbitrage trade where hedge funds would be able to go in and lock their trade up for 6 months, but immediately mark to market a purchase from net asset value to 100% higher, or a doubling of their mark to market, just because retail was bidding up the price of Bitcoin, GBTC relative to Bitcoin. Now the flip side. And I want to throw out a scenario for all these FUDsters out there, where imagine you're a large hedge fund, or let's look at a long-term rather than hot money, a long-term investor like a pension plan. $6 billion is the current value of GBTC. $6 billion is a rounding error for a lot of hedge fund, lot of large pension plans. And I can think of a lot of them that need 1% exposure to Bitcoin, which is approximately a $6 billion investment. It would make a ton of sense to me as an arbitrage guy that I would start accumulating GBTC at these prices, i.e. a 40% discount, gain a 10% weighting, a 10% position in the trust, disclose that position to the open market, and then try to buy the rest of the trust at a discount, so that eventually I own the whole trust, and then I unwind it and I put Bitcoin in cold storage. This is a possible strategy for some funds. I'm throwing that out there just to flip the FUD narrative of all this potential selling to, oh my goodness, what if it could be some smart fund turns around and wants to get a cold storage, eventual cold storage allocation to Bitcoin, but they're buying it initially at a 40% discount to the value of Bitcoin held in the trust.
Yeah, we've talked about that a little bit before, and I think that would be a brilliant move. The question is who would be kind of ballsy enough to pull that one off? Is the question.
I know a few accounts. That's where I know a few accounts, and let me tell you, you'd be surprised who is. Well, I don't want to divulge anything, but there are enough smart accounts out there that are doing that and
Yeah.
making that consideration. Again, Paul, it's as simple as buying $1 for 60 cents. I really
Exactly.
like buying $1 for 60 cents. So let's look at it from that perspective.
Yeah, I think that would be, yeah, that's a good analogy, and I think you're right. This is almost like a target right now, especially with the amount. If you go back to the chart, I mean, look at this trading chart right here. I mean, we are seeing
Well, that's the discount, right? So yeah, that's a huge discount, and you look back in history and see how much of a premium it traded. So it's just supply and demand in the market. It's sentiment. It's at the first time when it's trading at a premium, it's get me in at any price. And now it's a get me out at any price. Some of the recent FUD that's come along is they don't believe proof of reserves. If Barry Silbert and Grayscale has broken the creed and the trust, that's possible. I don't believe it to be the case. It would be tantamount to ensuring his business never survived another day. It would be like Fidelity breaking the trust of their custodial clients. I just don't believe that to be the case. That being said, is a zero chance that's the case? No, you always have to play risk return.
Well, in these markets and in the current conditions of what we've seen with the FTX debacle, I mean, you almost don't put anything outside the parameters of what's happening around the crypto specter. So it is a factor.
Fair enough. One thing I'll take an issue with is there's a very big difference between being a 30-year-old risk manager, a la Sam Bankman-Fried and his CEO, Caroline, versus a 30-year veteran of risk management. Okay, there's a big difference. Barry Silbert is much closer to the latter than the former. Yeah. The other thing that I would recommend that people understand in this, FTX was actually short Bitcoin. Okay, the world is actually short Bitcoin. Whether they are hedging other altcoins using the king of the castle, which is Bitcoin, that's the way markets work. You're always short the index, meaning if you trade a long short equity fund, chances are you're short SPX or the S&P 500 versus long position in single names. That's how you delta hedge yourself or call yourself delta neutral. The reality is most times you're hedged and wedged. There's no difference with a lot of these hedge funds in the altcoin space that are using Bitcoin as their short position versus their altcoins, which are less liquid, less valuable, and they try and control the mark to market by always being the bid to support it. That was the FTX story.
For sure. And with FTX, no, I don't want to get into it heavily. There's a lot of different arguments there. We've got, Silicon Valley, which is probably, I would say, I've worked in Silicon Valley. I've been in that side of the game for a long time. And a lot of our brethren, went in and put ridiculous amounts of money, I think irresponsibly into that. I mean, when you look at what we're finding now, it's almost as if nobody even looked at balance sheets to be able to do these investments. So the due diligence was absolutely off the leash in terms of quality. So that concerns me in itself, just because of what was happening with FTX. But I want to jump back to the Grayscale thing. I want to make a note right here. Grayscale currently holds 634,000 Bitcoin. Now remember, we look back on the Luna situation when the foundation, they only liquidated 80,000 Bitcoins. And look what happened. I mean, we saw a real significant move on Bitcoin in terms of overall price. It put us into the condition we're in right now, which has been, in that 23 to 16-ish range for quite some time that we haven't been really able to break out of. So it's still a risk. I like your analysis that there is possibly a play here from another fund that could maybe make a run on this, and that would be interesting in itself. So I don't know. In terms of risk reward kind of scenario, where are you playing this right now on Bitcoin?
I own Bitcoin in 3 different vehicles. Obviously, cold storage is my most important vehicle. But I also own Bitcoin in tax-advantaged Canadian accounts, so a purpose vehicle which allows for a tax credit and a Bitcoin consideration. So the way I like to consider it is the government or the tax authorities are providing me with a 50% incentive to buy Bitcoin. And then the third way I own it, which is in a smaller but not zero, is through GBTC. I've traded GBTC my entire Bitcoin career, which is about 7 years long now. I was selling GBTC when it was a premium because that's when you take advantage of the silly price. You sell a premium, and now I am picking away at the discount. I understand the concern, but let's look at that headline. Don't forget, the people that own GBTC right now think they own Bitcoin. What if you say they were to liquidate the trust? Well, the buyers have a claim on it. That nets out. There is not a 634,000 Bitcoin for sale, people. You do not understand the process. But people will write headlines as they try and create FUD and whatnot. Going back to the Luna situation, Luna brought us from probably 40,000 to close to 65,000 from the buying perspective. And then when it crashed down to around 31,000. But don't forget what else has happened since then, Paul. Celsius, okay? Arrows Capital. Bitcoin has held in there like a champ as far as I'm concerned. Bitcoin is at $70,000, Bitcoin, in my opinion, was cheap. I wasn't outright buying it with both hands. But the point is, people overthink this. Bitcoin is actually your insurance policy. And the fact is, the value of your insurance has gone up, but the price of your insurance has gone down. Should you be happy? Yes, sir, you should, because the world and the macro scenario has become a much riskier place globally since the Luna and Arrows Capital. Because if you look at other macro assets, I mean, Facebook stock or Meta is down. It was down 75% year to date as far as I look. So you get these headlines, you get the people who are Bitcoin haters. It's all good. It's what makes a market. But what I like to think of is Bitcoin is your insurance. It's like fire insurance. You don't sell your fire insurance when the fire is approaching your back porch, okay? The forest fire is now at your back porch. The value of Bitcoin as insurance has gone up, but the price of Bitcoin has gone down. You should be sitting there saying, thank goodness my fire protection has actually gotten cheaper.
Which is, that's what I do right now. I'm a big Bitcoin. It's still my number one position. I play around in other projects, but the focus is that when I look at long-term, and really the fiat differentiator is going to be at some point Bitcoin. We're going to see that happen. I clearly believe that. But if you look at what could have happened here with the SEC, if they just flipped this over to an ETF, none of this would even be an issue. Why do you think we're seeing the continuance delay across our regulators from allowing this to just move forward? Let's qualify Bitcoin as a commodity, get an ETF moving against it, make most of these altcoins into securities, let them trade on the open market if they can, and let's just move forward. I mean, it really changes the whole landscape of investing for the United States. What's holding us back?
Great question. Okay, my opinion. Now, I was involved in a company called 3IQ, which brought the first closed-end Bitcoin fund to the Toronto Stock Exchange that eventually morphed into a Bitcoin ETF, a pure creation redemption product that ensures that the net asset value of the ETF is reflected in the price. Now, in the USA, it's been a slower process. And one of the concerns is the ability to manipulate foreign markets, i.e. when Bitcoin trades, spot Bitcoin trades in Asia, that is not under the purview of the SEC. What is under the purview of the SEC is futures, Bitcoin futures. So they view the BITO product, which is cash settled futures on Bitcoin price, traded in Chicago, as being under SEC regulation and therefore comfort against price manipulation. I am of a different belief that I don't believe foreign markets are nearly as manipulated as the SEC may lean, if you will. I think it would have made sense, Paul, for this to happen sooner than later. But I'm not Gary Gensler. I cannot make it happen. And I actually I'm at least pleased there is a BITO product. Why? Because the price of Bitcoin would have fallen far faster and far more severely during the Luna and 3 Arrows Capital scenario if there wasn't that short base of futures that are the other side of the trade for the BITO long position in the ETF. Well, obviously that's offset by a short position. So these things balance out over time. Liquidity in the market comes in various shapes and forms. I'm a believer that a Bitcoin ETF would be healthy. Spot ETF would be healthy for the US market because it would protect individual investors against some of the stuff that's happened on their exchange and everything like that. But it takes time for that to pass through the various channels in the USA. Gary Gensler understands the beauty of Bitcoin versus other blockchain technologies and other altcoins. That is a certainty. What is more difficult is for him to pass the product through the various channels to get a spot ETF listed in the United States.
Yeah, I think, well, we're going to see, I think, a pretty good acceleration on some. I was looking at just everything from CNBC to MSNBC. We've seen it all, here recently on a lot of legislators coming out, obviously because of the tie of Sam Bankman to the Democratic Party.
Yes.
So you can immediately see the influx of political interest now in the crypto and Bitcoin asset classes. And I think this is going to be interesting because it could roll us into a little bit of an accelerated move on some regulation, at least on the exchanges, which would be the first one, I think. And then obviously stable coins will fall after that. And the easy one is Bitcoin because it just rolls right into the CFTC and it's a commodity. No big deal. Everybody just keeps on about their business. But I do think that will help at least the modern day investors who are starting to look at maybe diversification and some other asset classes as fail-safes, such as Bitcoin and other digital assets, to move a little quicker as the regulation starts to come up. Let me ask you this. In terms of a mix, now, granted, for our audience, Greg he's a Bitcoiner, so he's all in on Bitcoin. But when you look at, but at the same time, Greg, you're a modern day investor, so you're looking at risk reward, you're looking at a lot of scenarios in different markets. What is your mix right now on digital assets versus securities versus maybe real estate? Are you looking at any diversity right now in your portfolio? How are you playing this?
Yes. Well, one of my arguments, and I'm used to making pitches to large institutional investors my whole life as a former hedge fund manager, trying to gain an allocation from their massive portfolio to perhaps allocate a sub-advised portion of their funds to my hedge fund, for example. I will start off by saying this, Paul. I never argue for having 100% weight in any single asset. I'm a risk manager. So what is my weighting in digital assets right now? Well, firstly, I'm 100% weighted in Bitcoin within my digital asset portfolio. And why is that? Well, I own Bitcoin as a hedge against the fiat system. Right. And the only digital asset that hedges the fiat system is Bitcoin. Okay. So my weighting amongst other assets like real estate, like gold, like common stocks, like bonds, I'm 20% weighted in Bitcoin. I used to be a little bit higher, but the price of Bitcoin has fallen. I do trade my core position. That is my mantra for 30 years of managing risk. I have core positions, but I do trade them. I adjust them as the price goes up and down opportunistically. Now, the key thing that I say to all institutional investors is you need to have more than 0 Bitcoin, okay? Because Bitcoin is the best asymmetric investment opportunity I've ever seen. And therein lies the opportunity. If you have only 2% of your portfolio in Bitcoin and it achieves the price targets that I believe it will over time, your 2% is enough to hedge you against the rest of your portfolio that may be impacted due to the price rise in Bitcoin. There may be negative effects on the rest of your portfolio because Bitcoin is rising in value due to things that are having negative impact on the rest of your portfolio. So, for example, what could that be? Well, I own very little bonds right now, despite being a high yield bond trader my entire life. I was short bonds for the last year and a half. Bonds were, and hindsight is 2020, the most foolish risk-adjusted investment any portfolio manager could have been made. That risk return has balanced itself a little better now. So 20% is my Bitcoin allocation. The wrong answer for any portfolio manager is to have 0% in Bitcoin. Anything above 0 is the right answer, and then you have to adjust your portfolio accordingly to your risk parameters, including your ability to sleep at night. There's lots of people who own a lot higher percentage of Bitcoin than me. I don't feel I have to, again, because of the asymmetry of the investment opportunity.
Exactly. Yeah. So Greg, all right. So Kevin O'Leary, another Canadian investor out there, recently, obviously he got kind of sideswiped by the FTX deal. He was a brand ambassador for him, big investor, pretty much got wrecked. Took a black eye in the investment community. He's now moved his trading north to Canada because of the regulatory environment within Canada, regulated exchanges, etc. Do you think we're going to see more major investors like an O'Leary start to move away from crypto in the near future until we get regulatory guidance, or do you think people are still status quo?
There is an argument that I agree with, that the greater transparency or the greater regulatory involvement in the digital asset community will actually unleash pent-up demand for professional managers to gain access to that risk silo. A degree of regulation provides them comfort. In the case of Mr. O'Leary, no comment. I do know his history. He is a fellow Canadian. Let's just say that, perhaps his due diligence was a little lacking, but he's not the only one. To be fair, it was a bit of a club deal. Oh, Ontario Teachers, Sequoia, Kevin O'Leary, Temasek,
they're all in there.
It's just this is how the clubs work in the private equity world. What was really concerning, though, was placing your trust in a 30-year-old risk manager who you think has determined a new way to manage risk, when in fact the only thing he did well was fraud. Okay, so you got to understand what it is to sit in a risk chair for a certain amount of time, how you really understand how markets work, versus coming right out of MIT, thinking you're some sort of math genius. In fact, all you're doing is using customer assets as trading fodder, losing those customer assets, digging yourself a deeper hole, and hoping the market will eventually skate you on side. Criminal behavior begets criminal behavior. There are certain aspects of the due diligence that was taken by these major and very well-known private equity investors that can be questioned. But hindsight's 2020, okay? Yeah. Everybody's a genius. Everybody's a genius in a bull market. In a bear market, that's where you see where the real cockroaches are. And there's never just one cockroach. There is never just one cockroach.
There's many. Okay, Greg, I want to get into, because you're bringing out some points here, I think, that are relevant for what's happening in Silicon Valley, because we have a lot of VCs that have now got egg on their face in the crypto and blockchain markets. Obviously, FTX has kind of been the brunt of the spear. But there's many people, including, I was listening to the All In podcast, Chamath Palihapitiya, among others, who are now pointing the finger at the VCs saying, listen, you've been propping up these, basically these scam tokens, teaching people how to do this, and scamming and then doing rug pulls, and essentially the model that they're using is somewhat legal. Now, with that being the case, these are traditional investors. They've been in the tech investing markets for a long time. If that has happened, do you think we'll see any potential regulation or lawmaker move on Silicon Valley?
Absolutely. I'd even go further. There could be some people that face criminal or prosecution. Now, let's be careful. Again, I'll go back to everyone's a genius in a bull market. Okay, so all of these tokens that founders tokens that you can, the price goes up, you sell off your founders tokens. All of a sudden, you crystallize your initial investment, and you're playing with house money. After that, you're playing with house money. That was the VC game. This is why I'm only a Bitcoiner. Okay, Bitcoin has no CEO to grant founders tokens, which, there's a degree of centralization in all of these altcoins that allow these, I'll have to say it, some of these charades or even Ponzi schemes to succeed. Bitcoin has no centralization. It's purely decentralized. In my opinion, it's the only pure use for a blockchain, but I don't want to go there right now. It's just a difference between centralization and the ability to manipulate versus decentralization, i.e. Bitcoin.
Yeah, I want to jump over to, and I would agree with you. I think the situation now, the light is on the industry for good or worse. It's going to result in some changes, which I think the industry has obviously needed. And also we needed a good check against the glass here to get our head in the game and really understand, listen, we're gonna see some things we don't like. We're gonna see some things that maybe will be better in the future, but I think a lot of it is going to be going and flighting to these more central or decentralized risk assets that are out there right now, like Bitcoin. So that's the good thing. The good news on this side of the news is that 3 reasons on the FTX fiasco, which is bullish for Bitcoin, and it looks like they didn't really have a lot of exposure to Bitcoin, which doesn't surprise me in the sense of the kind of
they were
trades
short. They were short. They are short. They were short Bitcoin. Yeah, everybody is always short the index. Like I said, I wasn't surprised. I called this out. I said it will be shown that FTX will be short Bitcoin. How do I know that? Well, having managed hedge funds my whole career, you always see when people are short the index because that's the only thing you can sell. There's no bid for your crappy altcoin. Even if you wanted to sell it, you couldn't. So what you do is you sell something else and it gives you gunpowder or it gives you powder to buy or protect your position in an altcoin. Here's the funny thing. Turn around and try and sell your altcoin. Mr. Foss, you were the bid. I can't sell it to you. That's how these things work. So you're always short the king of the hill or the index. It's just the way hedge funds tend to work.
All right, I'm going to bring up probably the most explosive issue in the market right now that I think is out there, and that is this one right here. Here was, I'll just use Kim.com. He obviously didn't break this story, but there was a lot around this, around the FTX. So now you got the Biden administration really looking at potentially moving in with the Fed in New York that's now trialing a digital dollar. And this, again, goes in line with several major banks. So with this being the case, this is the thing that, it's one of the reasons why we started our channel was the democratization of just finance in general. We should be all in charge of our own businesses. And when I say businesses, our investing businesses. For our family, our regular business or anything else. A digital dollar changes the landscape very quickly because it could put the entire US population, possibly the globe, because many of the EU nations, along with the G20, will most likely follow suit with digital dollars. We've already seen it in the digital yuan and the controls we've seen in China on their own people. What happens here? I mean, because this could really be when Bitcoin meets its biggest challenge right there with some sort of government digital dollar. Where do you think this is going to go?
I actually think it would promote the adoption of Bitcoin because what is a digital dollar? Nothing more than digital fiat with surveillance. That is the key, okay? So it doesn't make it any more scarce. A digital dollar is just digital fiat. The money printer creates these because it has to solve the debt Ponzi that is called the US dollar debt spiral. But that aside, digital fiat is basically a centralized, and that's key because it's a centralized currency with surveillance. Oh, Mr. Foss, I see you spent your money at a restaurant close to a rally that we don't agree that you should be able to participate in that rally for, I don't know, freedom. So therefore, we're going to censor you. We're going to restrict your ability to transact in this centralized digital currency. More concerning for me, Paul, is a centralized digital currency with a best before date. Mr. Foss, you need to spend these dollars before December 31st or lose them. Creates economic push, but also it creates more consumption in a fiat economy that has too much waste in it anyway. So
Yeah.
I think it would promote Bitcoin as people understand they lose their sovereignty. They may be forced to spend money that they don't otherwise want to spend, or else risk losing that money.
Yeah.
And most importantly, here's what it comes down to. It's still worthless. Fiat is the problem. It doesn't make it valuable. Fiat has no value to begin with. So now you have a digital fiat that has all of these other negative attributes to it as well.
Well, you being Canadian, I mean, you've had a chance to kind of see this up close and personal with Mr. Trudeau, and have a chance. I mean,
The truckers,
if you had had any kind of confidence in the truckers' strike there in Canada, and you got your bank account dinged, so that kind of already puts it in a position that for people, because I have people around me all the time that say, Paul, this is never going to happen. The government is never going to put control on your dollars. I mean, come on, you're crazy.
Move to Canada. Move to Canada.
I said,
to Canada.
just move up to this place called Ontario, and you'll see what happens.
That's right.
So it is going to happen, and those are kind of things. Here's my thinking is that when I see digital dollar really lining up now, obviously there could be a catalyst. Maybe FTX is it. Maybe it's not. We don't know yet. But the real point is, when and if the government does make that decision to truly go all in on this, what is the likelihood of them putting pressure on the Bitcoin market to either, one, start to somehow restrict it in terms of acquisition and usage, or put so much pressure on the public that they almost have to back away from it and it goes into a black market kind of scenario? Do you think that has any risk?
Oh, yes. You always have to look at both sides of the risk spectrum. Now, I will throw out that there are a number of very smart senators like Cynthia Lummis who are advocates of Bitcoin on that side. But right now, you'd have to admit that most senators want to be able to control the public. That is the government mantra. But at the end of the day, here is what I believe will happen. In all cases, Bitcoin benefits. Bitcoin benefits if the USA embraces it, obviously. And I think that's how USA will maintain global reserve currency status is by embracing Bitcoin as the store of value that essentially backs their currently worthless fiat. But let's go one step further. This is game theory. Just because the US would do this, do you think some other country who is not friendly with the US might take exactly the opposite?
The opposite,
act,
for sure.
Okay?
Yeah.
It's called game theory. Again, you cannot censor Bitcoin. You want to turn off the internet? What would that do to the rest of your economy? Go ahead. Yeah. And by the way, Bitcoin does not die if you turn off the internet as well. So this is why Bitcoin is the perfect insurance policy. I believe that the price of Bitcoin eventually exceeds 2 million US dollars in today's dollars. Okay? I'm going to throw that number out to you as currently trading, to make the math easy, at 20,000. We know it's lower than that. But even at $20,000, Paul, the market's only giving me a 1% chance that I'm right with my price target. 20,000 divided by 2 million. I'm not 100% certain I'm right, Paul, but I'm way higher than 1%. So you can think about all these bad things that could happen. Hey, I'm only 1% chance of being right. Throw it at me, baby. I'm ready for the upside, okay? And that's how you manage risk. Try not to focus on focus on the donut. Don't focus on the hole. The donut is a global competition. If you want to focus on the hole, you're Peter Schiff, okay? You haven't done the math. Shifty Pete actually understands that he's mistaken. He's a horrible risk manager. He is an absolutely horrible risk manager. If he had bought 1% of his portfolio in Bitcoin when he was first introduced to it, he would have been the best performing hard asset manager, i.e. including gold and Bitcoin, in the history of hard asset managers. But he is not a good risk manager. And all you have to hear is Shifty Pete in the background. Blah, blah, blah. I told you it would go down from 70,000. Oh yeah, Mr. Schiff, you also told us it wasn't worth $10, okay? So you can't suck and blow. You cannot suck and blow. You have to manage risk according to all the information that's available.
Yeah. One thing is what I have found, and when we've had a chance to talk to a lot, but when we kind of vet out our guests here, everybody say, hey, listen, if you get Greg on, it's going to be an exciting episode. So Greg,
I'm passionate. I'm passionate.
I can tell, and that's good. I love that about Bitcoiners. Let's get into a poll real quick, and then we'll take a question for you, Greg, as well. All right, let's take a look at the poll. All right, Bitcoin bottom next several weeks. Some people pointing at 14, 15, but everybody likes this 10 to 12 number. Do you think we see those kinds of numbers, Greg?
I don't care. It's so stupid cheap as it is. Why are we overthinking this?
Yeah,
okay.
Worried about it.
It's silly cheap. It's already cheap. The market's only giving me a 1% chance of being right. Do I need the market to give me only a 0.5% chance of being right? No, you got a dollar cost average into your insurance policy. I'll talk to you in 20 years. Everybody's the world's greatest trader. Fact is, you gotta look at risk return. Look at it, lower your time preference. If you have 100% of your portfolio in Bitcoin, then you're probably worried about this. But if you have a proper portfolio allocation where over time you can add to it when it is cheap and peel some off when it gets a higher price, that's how you trade a risk asset, okay? And Bitcoin is the most beautiful asymmetric opportunity I have ever seen. Bar none, full stop. Why am I going to worry if it's going to trade at 16,000, 20,000, or 12,000? You guys are overthinking it, okay? Because when it trades at 2 million, if and when it trades at 2 million in today's dollars, this is what I need people to understand. This is in today's dollars. You guys are going to look back and you're going to say, man, was I ever a knucklehead trying to fine tune or thread the needle as to what the right price to get involved in Bitcoin?
Yeah, you're trying to find the bottom here. Nobody's going to pick it.
Paul, I hear you, brother. That being said, no bell goes off when a bottom is struck. The more important thing is, let's say I'm looking at my own portfolio. I don't need to worry about the 20% of my portfolio that's in Bitcoin. I really need to worry about the other 80% of my portfolio that is not in Bitcoin. That's where I should be doing price sensitivity. Yep. Thanks.
Well, and securities right now, we are many people are pointing at potentially securities seeing another big pull down. We're going to have a macro team on today as well to kind of break down some of the pressures that we're seeing, which is only good, I think, only good for Bitcoin in the essence that we would see a lot of flight to safety, but even more so, more of the Bitcoiners just continuing to do what they do best, and that is hold. So I think that in
the whole world right now, Paul. The whole world is one trade. It's DXY. It's the global the US dollar wrecking ball globally, set off of US 10 years. So it's really one trade globally. When the DXY rolls over, and it appears it has, hard assets have their day in the sun. Hard assets, what are they? Gold, real estate. What is the best hard asset ever made? Bitcoin. In theory, Bitcoin should be having its day in the sun, but it's being dragged down by its own macro issues right now. Those will settle out. The world is short Bitcoin. Never forget what I'm just saying. The world is absolutely irresponsibly short Bitcoin right now. That includes people that don't own it, as well as hedge funds that are short it because they're long all this other garbage, digital asset garbage besides Bitcoin. Everybody is underweight Bitcoin to the proper weighting for their future, for their children. Please understand that. Thanks.